The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman on this Tuesday the 29th of April. We're just about to wrap up the month. Really important. We've got a nice big push since 10 o'clock. We've had the market push high. This is the Tiger Traditions Hour. Check out my opening call daily newsletter. Got some new positions doing very nicely. Let's go to the prices of everything. The Dow's up 234 at 40,460. It needs a little bit more for that 9-period moving average to finally cross positive. We're looking at the S&P at this phase. Here we go. This part of the market at 10:07 a.m. We've got the Dow, the S&P at 14 at 55.43. You can see that 9-period moving average crossed positive a couple of days ago, and that really is a very good sign. We've got the QQQ. This is the index 100 trading up $1.75 at 474.14. Almost at the height of yesterday's high. That's really very good. 9-period moving average is doing well. IWM Russell 2000 small caps trading down 50 cents at 194.44. It's struggling a little bit, but actually the chart is quite nice and it doesn't look too bad at all in the daily chart. Weekly needs a lot of work. I want to go to the SMHs, semiconductors, very important. The importance is that I don't expect the semis to actually lead the way higher, but I would like them to participate. And they're up 51 at 211.16. I'd like to see 214.50 to 215.20 by about maybe tomorrow afternoon. Tomorrow's close. That'll be really exciting if it can do that. I'm going to go to here we go. One at a time. The XLK I was asked about. Yep, the XLK is the S&P Tech Spider Fund. So that's a peak A. That's another A right there. Right there. And this becomes a B. This is actually doing very nicely. It's gone above yesterday's high. This is the S&P Select Tech Spider Fund. And it's really important at this point that we do have some upside movement in the tech sector. Good. And I want to go to gold. Gold is down 36. I think gold is going to take a bit of a break. Well, we've been saying that since the high of just over 3,500 about 6-7 sessions ago, and we're digesting gains. And I think that's important. At 33.11, give us time to go to other areas. The leg D in the weekly chart, maybe a peak D this week, leg D in the monthly chart. I don't see any reason why there shouldn't be some kind of a digestive move. Doesn't have to say you smash to the downside. It will be more serious if we close under 3,200 any day this week. Let's go to the Bitcoin. Bitcoin is trading right now. It was up before. Yep, it's up 276 at 95,780. I think it's acting very well. If it gets to a leg D, right here, this is a peak C in the Chapman methodology. Let me just show you this quickly. In the technique that I developed decades ago, try to identify the lowest low bar, then count each successively higher peak, alphabetize them sequentially on the way up with uppercase, on the way down with lowercase, but it goes to 6 higher peaks. It goes peak A, peak B, peak C's third. The fourth is peak D. That's where other things can happen. That's where you can get your sharpest decline. That's where you can recycle to the upside. But the objective in the Chapman methodology is that if you get a buy signal upgraded to a buy mode, there should be at least 4 peaks. Well, we're at peak C right now, and the stochastics at 95% in Bitcoin. The on-balance volume is very good. MACD is still expanding. The histogram's expanding. Relative strength, the little gray line there is rising, and the 9 is way over the 14, and the price is way over the 9. So all of this says there really should be a leg D to the upside, at least in the in Bitcoin. Now, another thing I want to look at. Let me just do this here, if you don't mind. I'm just juggling around here because there are just so many things going on. So that's the Bitcoin. I need to go to in the gold. Let me do gold again. So gold trading down 31. The GDX as the gold miners, trading down 80 cents at 48.63. You can see that 9-period moving average is still very strong, but the price is struggling just under it. And it just says to me, expect some kind of a digestive phase. I would relate it to the dollar, but they've really been quite separate animals for a long time now. Dollar's very weak. Dollar's up 3 cents right today. It isn't acting all that great. We're not long the dollar anymore. We were long from 2018. Finally, I said, you know what? If the administration's philosophy is to get a weaker dollar, and that's going to help imports, exports, etc., we don't need any part of that anymore. So we're out, and now it's at 99.05. Let me just do the euro. EUR, USD. The euro is trading right now at 1.139. It's had a peak D. It's digesting gains. Oh, it looks a little bit like the gold, doesn't it? Peak D in the weekly chart, leg D in the weekly chart, leg D in the monthly chart. Let's go to the USD JPY. USD JPY is the yen. And the yen right now is up just 24 cents at 142.25. It's kind of straight. They're all doing very much nothing. I think Bitcoin is becoming I don't want to talk about it. I don't want to jinx it. But I am saying that I think Bitcoin has become a little bit of a leader in the whole currency situation. Nobody heard me, right? Okay, next thing we want to look at here is, okay, that's out. That's good. Now what I want to look at is within the context, this whole framework here, where is the VIX index? The volatility index is trading at 24.86, down 27 cents. It hasn't really broken down. It certainly had a huge spill from that 60.17 April the 7th high, peak E, come down. But look how it's taking its time. Down the little dreaded H, pull back. But I must say, holding here means that a lot of people are still holding and buying insurance. That's all. If it was down at the 22 to 21 area, I say, you know what, all systems go. Right now, it's just saying this is a bit of a struggle. A bit of a struggle in the sense that you have, how can I put it? You have a mixed market. You have the whole thing with tariffs. You have another aspect that is really important, and that is within each category, you have something going on, whether it's political, whether it is geopolitical, whether it is economic. So the market is just under a little bit of stress right now. And I wanted to do this as we're going to the break. Before we go to the break, I just want to show you. So this rally this is still a leg A to the upside in the 10-minute chart in the E-mini. I don't know if this is going to be a 2-click session. I had partially a 2-click session, but I got out. Now I have to try to get back in because I'm doing the show. But if this 9-period moving average in the 10-minute chart of the E-mini is holding so well, and if, there are a lot of ifs, that's the market. You have to always say if this, if that, and you have to work around it. This 10-minute chart, it's already a leg C in the 5-minute, but only a leg A. If at any point in the next hour or two, maybe going into Steve's show, I think Steve was recorded, but Steve's hour, if there's a move into the 55.73 area, and so that's it's 10, 20 points, let's call it 20 points up from here. That's a lot. But if there is, because there are a lot of things going on right now with fund managers going into the end of the month, they get money that they have to put to work, as well as they want to rotate through different sectors. We'll see. But if you can get to 55.78 in the E-mini at any point in the next hour or so, I think it could be a nice surprise to the upside. We'll see. I'll be right back. Dallas of 173, Basil Chapman type.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
All right, folks, I had a couple of questions. Let me just get to the questions right away. Limited, okay. So the question is, Kiki wants to know, Basil, will you buy NXE, Uranium Power, or Nat better? Nat is a shipper. Yeah, Nat is different category altogether. So NXE is trading at $5.30, Next Gen Energy Limited. I didn't remember that they were uranium. Doing very nicely. All those energy stocks have done very nicely in the short term, especially the very low-priced one. If you look at URNM, that's uranium, that's the ETF, that's had a bit of a rally. A, B, C, D is actually leg E. The weekly chart has got a long way to go. Now, the question is, you're making a choice out of the two, but NAT, not NET, NAT, that is Nordic American. Now, I followed NAT for decades. I remember so distinctly back in, where was it? That was 2006. Was it here? I remember the CEO being interviewed by Kramer. It was in this move that was going up here. And I remember saying, I used to have the chart that actually said CEO, and it was right at the top. And he was saying, we've given great dividends every single quarter for the last 40 or something years. And we've tried to increase them. And we're buying new ships and all that stuff. And it just went, I think it was much higher than that. It must have been this move here. I thought it went back to 2005. Anyway, I've got the chart starting as an IPO in 2005. All I remember is that he said it at a high, and this thing went down and down, went from the 40s to the 30s to the 20s to the 10s, and then it went to right here. I couldn't believe it. And when he was interviewed, he still said the same thing. $1.86. So it goes to the under $2 range in 2018. Then it suddenly spikes. Beautiful spike, peak A, peak B, C, D. It goes to an E. April, exactly 5 years ago, April of 2020. And it goes to $4.55. Unfortunately, it comes right back and it tests the $1.40 area. Now it goes to peak A, B, C, D, E. And then it does another E and now it's pulling back. So that's the monthly chart of Nordic. So I'm just going to say to you, they're two different, I would look at it as two different categories. And if you look at the chart, look at the weekly chart, look at this weekly chart of NAT, Nordic American tankers. And now look at the, what did you ask me for? XX, what was it? NXE, I think, yeah, NXE. And look at the weekly chart of NXE. It's a little bit different, a little sharper, and the move down with a double top in the eighths back in 2004 and then twice in 2004. That double top really saw it tumble to the downside. So I think that they're doing different things. Now, this is what I'm going to suggest to you. I like NXE as a chart formation in the daily chart. The weekly chart needs a lot of room. But so does NAT, and they are different. They're different creatures, really. If you look at them, I mean, they do different things. So at 258 NAT, I'm going to suggest to you that I would start just a small position in NAT, NXE, and you asked me earlier about which is better, and I'm going to say to you, NXE has already done something very good in the sense that it had a buy signal. Remember, we just spoke about it right here. Let me show the chart again. It went from a buy signal to an upgraded buy mode. Then the 9-period moving average, everything was working well. The stochastic strong, and it's at a D. And that says it's holding well. Why would you do anything other than say just at D? You've got to be a little careful in entering. So if I was to actually choose out of the two of them, because I see that many of the other uranium stocks are starting to move, I'd have a preference for this. But you asked me about NAT, and I'm just going to say I would actually nibble at a position there. But the NXE position, Next Gen Energy, I would start a position, but I'd split it into two parts. I'd prefer to have a little pullback here to get it under 520. I wouldn't want to miss it really, because if it really spikes from here and goes to 560, this thing's just going to take off and soar to the upside. It doesn't look like it's going to happen right now. So my preference is start a position of 520 and have a little patience. And if it holds above 480 in the next 3-4 sessions, preferably doesn't even get back there, then I would add another position. I'd maybe even have 3, then I'd have another position, and if it broke to a new recovery high, above today's high of 547, I would add another position. That's the way I would look at it. I hope that helped you. And what am I looking at? I'm really looking at the whole 480s as a very important support for the stock. But when you're talking about a very low price stock at $5.26, it's really unfair to give it less than 60 or 80 cents leeway. I'm just thinking that if it's going to do that, then I have to look at that weekly chart. If the weekly chart, MACD had already crossed positive, I'd say I'd do it, but it hasn't. So I'd stick to the little methodology I gave you right now for some kind of an entry. And I would say out of the two that you discussed, this is the one that I prefer. But the other one's doing quite nicely, so I'm just saying it could start your rally. So if you want to just get a little bit in there, that's something else. All right. Okay, next question came. Oh, yeah, next question was FXI. I almost forgot that. FXI is the... Where did I type it? FXI. Oh, I need to show you something. FXI is just going sideways, but the 9-period moving average has turned positive. So that says to me... that it's in play, but it's not showing, it should not take 4 sessions sideways after that peak B. So that says to me, it needs time, and we're not going to get that. Now, I want you to just go back to this, because what I had said was, I think I did give support, but I need to reemphasize. So the support I was going to say for the single leg 8 to the upside, you don't want to give that back, because that becomes an Eiffel Tower failure pattern. If that's the case, then you've got to be very careful in this E-mini because under 55, I'd say under 55.35, I think we have to restart the whole thing. And I think you have two conferences, or I think there are two economic discussions going on at different times today. So the market is a little bit worried about that. You can see that. All right, so now let me get back to the story here. Okay. So the question came in a few days ago about SoFi. And I just glanced at it and I said I'd get back to it. So SoFi had a big move up today. I don't know if the earnings have come out yet. SoFi Technologies, online banking, financial solutions, student loans, etc. It went to a leg B, spiked up from yesterday's high. I'd drawn this in as a left side, right side price time match. Did I do this live? I don't know. Anyway, I did all the work. I just can't remember if I actually discussed it. Maybe I did it while I was discussing it. I know there's so many charts. But this is really important because if SoFi Technology is trading at $13.78, up 58, is able, through whatever happens over the next 2 days, to buy Thursday afternoon, going into Friday, is closer to 15 than to 13. I would have to say to you that is a really good sign. That's a good market sign. That's what I'd be looking at. All right, we're back and we're looking at the Dow up 20 and the S&P's down 12.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstadt's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstaddt releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
All right, folks, so Visa comes out with earnings today. I don't know if they've come out with the earnings yet. Down 32 cents at 337.19. Not really going anywhere. I'm not sure when MasterCard comes out. They usually kind of come out together, but maybe it's another time. Also, just like MasterCard just stuck. And the one that we were talking about the other day, we didn't get in, has done very nicely. It is down today. It's down 248 at 183, but it did go to almost it went to 189. We were looking at it in the 172 area. So that's a very nice move to the upside. But you remember, I always talk about this inside track repellent zone. Look at that. Very, very strong, repel the price right there. This is the weekly chart. So we're going to be watching that very closely. We've also got, where did I want to go? Altria. Mo's Altria, very nice. Came out with earnings maybe today because it's up 88 cents. It was down to 56.81. It's trading right now at 59.08. Peak C there. Leg D to the upside. Oh, this is it. So tobacco, cigarettes, wines, probably more tobacco and cigarettes than wines. Let's see what STZ is doing. But this is acting very well. But if you have any moral qualms, then just, don't buy it or buy it and then donate your profits to Cancer Society, whatever it is. But the chart itself is doing very nicely. This is Mo Altria. And let's just look at STZ, which is, here we go. STZ is Constellation Brands. Come on, here we go. Get that, refresh. Okay, trading down a quarter point at 185.50. Went to a peak E the other day. Not doing very much after all. This has been the area that, Canada, who came in with elections, and I don't know if it's going to improve the wine situation. I spoke about this the other day, that know someone who's very involved in the wine industry. Well, they're selling the wines, and actually they have some vineyards in California, not enough to make it up for all the problems. But he was talking about the price of glass for the bottles, not so much the wine, and the fact that in Canada they just took them off the shelves. I mean, what do you do with that, right? So this is an issue for Constellation Brands, but must be tobacco, etc. So now let's go to something else that I wanted to talk about in terms of IYR. I don't think I've updated it lately. I had a question about it. Updated it lately. It just disappeared, everything I did. All right, it doesn't matter. So this is the REITs. This is the iShares US REITs. And the real estate, and look, peak A, peak B in the monthly chart. The candle says, yeah, it's not bad. It's holding quite well. Weekly says, got a lot to go. It's over the 200-period moving average, but struggling. The daily chart says the 200-period moving average of 94.15 is a problem, and you can't count that as A because it made the low. You have to move to the right to get a trough. From the first trough, you can start counting the peaks. So this becomes peak A. Right there. This becomes peak B, and it's just stalling. There are so many charts that had really nice moves, and then suddenly they started to stall here. So let me just do this. So in the REITs, I'd say because it's a little bit more complicated, just a little bit more complicated in putting into your portfolio because there's some tax issues that you have to deal with, but it doesn't really affect anything other than some paperwork. But most importantly, what I am looking at here, A, B, C, D, E. Yeah, then it's had a very strong move. The weekly chart, it kind of stalled, made a double top, came down. It's just in the middle of a range. So I don't see anything here. I mean, if you want to go to some in the area, CCI is one, I believe. That's Crown Castle, Inc., Cell Towers, Fiber Cell. Yes, a little bit better chart, actually. It's acting quite nicely, up to 37 today at 103.20. This is one that's actually often on my list. I don't think we've ever owned it, but it's often on my list. I would say that I'd be more favorably inclined to start a position in this, expecting that the daily chart will go to a leg D into the high 105s. That's at 103.19. And if it does that, then suddenly the high that was made right here that is the 3rd of April with a high of 109.08, that will become a target. So yes, nobody asked me about this now. They asked last week, and I said, it's acting okay. CCI Crown Castle. Now it's acting a lot better. Next question came in. Where did it go? I did the FX. I did that. Yes. So what's my overview? My overview hasn't changed. I'm anticipating that this low that we got, using the technique that I've developed, the Chapman Wave Dark News Index, INDU, there it is, gave a fabulous residual low. Remember, I talked about earthquake and aftershock. The aftershock can sometimes be worse, the same, or less than the earthquake, but that's what I look at: internal low, residual low, internal high, residual high. And this one I called on the 7th of April at 36,611. I said, I believe I'm going to have this as an internal low going to this particular low, which is a residual low. There should be a good rally. And then I said, this little double top worries me somewhat. And then we pull back to this trend line, and now we're going high. Actually, I should say that we are long. And I'm anticipating that this, I won't know until Thursday or even Friday whether or not I'm going to get the endurance that I need. For instance, I mentioned this earlier, the Dow has not yet had the 9-period moving average cross positive. It is really close. It's at 40,387. I suggest to you that 40,435, 40,445, in that range, you'll suddenly see this 9-period moving average cross green, and that's going to be really important. Within that context, what we are looking at is the S&P has already done it. So let me just run this for you right now. The big resistance in the S&P is it's 5640. That's the 200-period exponential moving average. Look how it was resistance all the way there, and it's going to be resistance again. We're only in B. If we get to a C and then a D, and we're by Friday or Monday or so, it could be tomorrow, C, yeah. Could be Friday. But let's just say early next week, that's the challenge. And this is different to all the other takeoff. The other takeoff areas were, look at this. When you take off, you zoom to the upside. When you take off, you zoom to the upside. When you take off, each time, it's just a fabulous move to the upside. This has been a bit of a struggle. And that's just warning me, and it says not all the ducks are in order, not all the engines are working. There are certain areas that show something a little different. Look, if I go to the QQQ, it's a little bit better chart pattern, but they all have the same thing with the 200-period moving average that was resistance before. In this case, 482 is the resistance in the 200-period moving average, and we're at 473. That's another 7-8 points, right? So I'm just saying that it's a work in progress. I'll be back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, you can see, first of all, I was asked a little while ago, anytime I got a screener that popped up on my screen, could I just mention it and they'll do their own homework? So BCRX has again showed up. This is BioCryst Pharmaceuticals, trading at 854, up 22 cents. Leg B, this is very strong. I should not have been afraid of this. This one I should have just said to subscribers, as a trade, you can get in. It's acting well. Key support is in the at this point 8.30 area, 8.20. It's a little bit of a dip for percentages, but it looks like it's acting well. Anyway, so I just mentioned that. Another question came in. Myrna has earnings this week. Myrna is Moderna. Don't tell me I lost all that notation. Oh, I hate that when that happens. It's there somewhere in the file. I just won't be able to find it. It made a spectacular top. I discussed it right there at 497.49 with a round number open in a monthly chart. To get a round number is just not just serendipity. It's amazing. And it just tumbled from the August 2021 COVID high right down to the recent lows in the 23 area. And that's made a little double bottom. You know, at some point, I think that they will get something again. They'll get something right. But a lot of that money was so focused. It tells you that this is really, the company was really just a $20 to $30 company. And that whole move up, that tenfold increase or more, was really just through the COVID. And that's all. And they haven't been able to get a particular focus that is a money-making focus at this point. So even if the results are very good, be careful, because the magnet of the 28s is at 27.51, 27.28 area. That's really potent. So it would have to really travel into the, I'd say 30. It would have to get through this gap into the 32s. And for an entire 3-week period, it cannot touch 28 again. It has to say, that's it, I'm done. I'm now on the upside, making an iron reversal. I can just tell you that. Otherwise, it's back into the low 20s, and that's looking at it. So I'm going to do this now because I wasn't asked about it today, but I do remember being asked about it, and I wasn't sure when the earnings come up. Let me just see if I can find it here. Yeah, you had mentioned, I'll have to just paraphrase. I think the person said, you had mentioned a long time ago about Walgreens and Walgreens Boots and CVS. And that out of the two of them, Walgreens was starting to, just for the first time, starting to form a better support level. Then it was taken private, so that's done. So what about CVS? So CVS, we haven't done anything yet about it because I think there are a lot of challenges. The chart suggests that there are a lot of challenges. Look, it hits the 200-period moving average, CVS Pharmacy, Health Core, hits the 200-period moving average in the 61 area, 60 to 61. Powers into 71 within 1 day, gaps up and earnings and all that, has a green candle following with lower lows and lower highs, and that's it. And now it's at 64.88. I think it's a work in progress. If you have a lot of patience, I don't mean patients, I mean patience with a C. I would say you could start a position, but it has to be one of those long-term positions that says, I'm dedicating X amount of money to this particular position. I'm not taking anything out unless something absolutely dramatic happens to the downside, and just let it build up. And that's the only way I would do it, because at some point, with the way healthcare is going and all, this is a stock that should, under other conditions, when they finally get things right, is trading at 64. This should be traveling in the 80s, maybe even the 90s at some point. That's just the way the chart is suggesting, based on the action, the 200-period moving average in the weekly chart, which is a 71. The magnitude of that is just pulled away a little bit. The 9 is over the 14. I just, for subscribers right now, I want things that are moving. I want a chance to get into something that is participating in every rally of the market. And that's a different way of looking at it, as I had earlier on, where with the things that we liked and we wanted in and we were prepared to have a little bit of patience. This is a little different, because the way I'm looking at it, let me go back to the chart, because I was asked about what's my overview. My overview is that at this particular point, the market is going to push to the upside. You can see every time we've got the sell, look at this, even the E-mini, every time we get the sharp sell-off, it wants to go back and it's pushing high. And here's your leg D in the 1 minute chart. You're going to get a D over 55.70, 70.50, so 55.70.75 starts a leg D in the 5 minute. Think of it daily, weekly, monthly. And if that happens, that'll be a leg B in the 10 minute chart. Under other circumstances, besides some of the administration coming out to talk today at different times, under the other circumstances, I would say I feel very confident that the 10-minute chart is going to get to a D today, Tuesday, the 29th. I can't say that now because this market is really just holding on to every breath, every little word I can see. But the bias, I think, is still to the upside. Okay, with that said, just wanted to get that out the way. Oh, here's the other thing. So people say, okay, it's upside, so give us a number. I really don't like to give numbers, because if things change and I now have a different number and you see thinking about the old number, I don't like that. I have it in the back of my mind. More importantly, what I'm just making it absolutely clear is that on the Dow, 41,000, that's 41,614 is the 200-period moving average. How the market deals with that is very important. If in the second week of, let's say the first full week of May, not this week, but next week, there is a push into the 41,600 area, I'll be really impressed. But all I can say is that 41,514, 614 is very important resistance. S&P, right now, the S&P has what did I say? It was 5640. Yeah, 5640. It's trading at 5537. I mean, that's 100. And over 100 something, that's a lot of points, okay? Yes. So, with that said, I want to go back. I want to show you something about this. The IYT, which is the iShares Transportation Average ETF. Too many words. down 4 cents at 59.97. This is a warning to me to say, there's a lot going on. Don't overestimate the positives. Keep in mind that this transportation index is telling you that not everything is hunky-dory. If you're looking at jets, the planes were flying high into January. The US Global Jets ETF soars to the 26, 27 area. It's trading right now, after coming down to 17, is trading at 19. That's another reason why I cannot get excited when I'm saying to subscribers, let's be very specific. Let's get what is in the sweet spot. And if it stays in the sweet spot, that's good. Otherwise, we tighten the range and we make it tighter and tighter.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Folks, so just to wrap up this very last segment, so let's just make it clear. If the E-mini trading at 55.66 is somehow able to get to 55, I would say 55.78 in the next, I'd say 30, 40 minutes, I think that's going to be very good. And then other things can happen, but my guess is if it does that, somehow or other this 10-minute chart will make higher highs and higher lows and make at least try for a leg D at sometime mid-afternoon. And here we are at 10:54 in the morning. We'll see what happens, all right? Let me just raise that a little bit. There we go. Okay. So A couple of other things just to touch on. I was asked about platinum. Yeah, platinum is trading. It's acting quite nicely. And if these different metals, so we've got 980.70 down 14, but it's gone to peak A, peak B, and leg C, right? I've done a fib, but that fib is now inactive. So yes, so this is just telling us that in certain areas you have some strength, but I don't see this as great strength. I just see this as kind of important to monitor. That's all for platinum. So I just wanted to go back here I had someone that said something, whoa, it's flying. Yep, there we are. We've got our leg B. So this is it. This is using the Chapman methodology. We discussed this. 9-period moving average, even on the pullback, held beautifully, and we're up at leg B. I just like what I'm seeing, and all I can say is that within the context of patterns, I say to you that there should be buying coming into the end of the month, going into the end of tomorrow at 4 o'clock. I don't know if it's going to hold. I don't know anything other than what I'm looking at. And what I'm looking at is I just see a little flow of money coming in to save the market every time there's a dip. That, to me, is very important. So with that said, Steve Rhodes is out, but I'll do the market, the 11 o'clock update. Steve's show is recorded, always pertinent, and I will see you later with Jacob.